All right, so we're going to talk about delisting risk for Alibaba. I was going to do a video on multiple risks all at the same time, but I think that the general conversations I'm hearing are primarily geared towards delisting as the risk right now, the one that people want to talk about right now. So I thought I'd pull that one out and do a video on its own. And I'm still planning on doing another video about the various other risks that are involved. But I mean, if you've been following Alibaba or any Chinese stocks, there's been a bit of a cycle over the last 18 months where the fear kind of moves around. It started with the Ant Financial episode and the tech crackdown, and that was the main focus at the beginning for the first 6-8 months. And then it started to move to other things, and then around the time Didi was having its problems, then it started to the conversation started to move towards delisting, which actually had been around there before because Trump delisted a few stocks actually earlier in 2021. But then after delisting, we got into growth concerns with companies like Alibaba, and then Evergrande was a problem. So is there going to be contagion with this stuff? And then China and Russia had their meeting, and Russia invaded Ukraine. And so then the conversation moved to Taiwan, this big risk about Taiwan. And now we come full circle back at delisting. And I think this was kicked off by earlier in the month when there was basically the U.S. started the clock on five companies that they say these are companies that are at risk of delisting by the end of 2021. So I'll put those companies up on the screen. But that spooked the market and sent Chinese stocks lower and took us back into the delisting conversation. So I'm going to do this video in 3 parts with respect to delisting. So the first one is there's been a press release put out recently. So we'll go over that, and we'll talk about the Chinese view on delisting and what the general mood is there. And then after that, I've got an example of China Mobile, which actually did get delisted in early 2021. So we'll go through what happened with them so that if you're worried about delisting, you can see the process that might follow. And then after that, I'll just do my closing thoughts and why I'm still investing in light of this being a risk. Okay, so first off, let's start by looking at the part of the press release, or part of the news report based on the meeting they had. So here it says, on the regulation over U.S.-listed Chinese firms, the meeting said the Chinese and U.S. regulatory bodies have maintained good communication and made positive progress. The two sides are working on a concrete cooperation plan. The Chinese government will continue to support various enterprises to seek listings in the overseas markets, the meeting said. And so this is from the State Council, and it sounds very supportive to me. And this is part of a variety of statements they made earlier in the week, which sent Chinese stocks flying. So this statement looks to me to be very supportive. It sounds like they're interested in coming to a resolution. Now, if you've been following this, they've actually been the press releases the Chinese side has put out have been actually quite supportive of finding a solution. It appears to me that they're very consistent in wanting to come to a resolution here. They're wanting to solve this problem and keep stocks listed in the U.S. But that message has been mostly ignored. I'm not sure why, but it doesn't get a lot of airtime. It hasn't got a lot of airtime over the last 6 months. The airtime has gone to China's dangerous. It's uninvestable. Everything could just get thrown out the window if they don't comply with these audit rules. And so I think this is a sentiment issue, because this statement isn't actually very different from what they've come out with over the last 6 months. I think it's just getting a bit more notice. I have been buying Alibaba all the way down from 200, and I recently bought a huge batch at 75 via long dated calls. And the reason I'm not worried about delisting is because I think there's a lot of incentive on the side of getting a deal done. China wants to have access to U.S. markets, and in the U.S. there's a lot of investors that own Chinese stocks, and it's not really in their interest to screw their citizens on this front. So, but at this point, I would think it looks like the U.S. has the upper hand, and they're basically just saying, "Give us what we want, and you can stay listed." And China's going, "Okay, let's find a solution." That's sort of my take on it. So it looks to me like the U.S. is pressing their advantage, and China is starting to look like they're gonna compromise. But really, what I think here is there's 3 years to get this done. That is a lot of time for positive news and negative news, and I bet you we still get a lot of it on each side, and the stocks are going to go up and down and up and down. And so my investing style is I like buying into the fear and selling into the euphoria. So there's been a lot of fear around China, and I've been buying into it all the way, as we say, all the way down, where it's now about 35% of my portfolio, because I believe that the fear is overdone here. I believe that the fear is out of line with the reality of the risk, and I'm happy to get crazy deals on fabulous companies that I can hold for the long term, or at least until the euphoria returns. If we get another mania in China where everybody's just bidding prices up through the roof, I might sell into that, but we'll see for now. So, and just generally on the regulation front, the Chinese government, I think the view from this side of the ocean is that the government there they're portrayed as being actively hostile towards Chinese shares. And I think this is the first sign that we're getting some airtime on, where it's showing they're not actually hostile. They're actually quite supportive of their companies and their citizens. So the sentiment may have changed here based on this last week, but who knows? We'll keep an eye on it. Now, with the possibility of what could happen here, now there is the chance of delisting here, and one of the scenarios that can happen in the delisting is that the stock is removed from the U.S., but it continues to trade either over the counter in the U.S. or on the Hong Kong Stock Exchange, the Hong Kong Exchange. And I'll put a chart up here of what happened to China Mobile when they got delisted. So if you look here, in early 2021, on January 8th, the stock was delisted in the U.S. So you can see a big candle down there to about $40. And what happened after January 8th is the stock bounced in Hong Kong, because all the forced selling in the U.S. Pushed the stock down, and then which coincided with the stock getting pushed down in Hong Kong. But then once this storm had passed, once the delisting had happened, everything bounced. So if you were able to just move your shares over to the Hong Kong exchange, you wouldn't have suffered much of a loss here. There might have been a bit of arbitrage, a bit of a difference in price for a few of the days on these exchanges, but overall, you probably would have been fine. So I did I was looking into it. I was thinking, can I actually still buy? China Mobile, and I just placed an order earlier today just to see if I could do it, and then I canceled the order. But the order was accepted, and so it looks like it's fine for me to continue to buy these shares in Hong Kong. So for me, it would have been a non-issue if I'd just been able to buy in Hong Kong. Now, I'm not sure about what happened in the U.S. if you can still buy through Hong Kong. So if somebody's in the U.S. and they know the answer to that, maybe if you don't mind posting it in the comments, that would be fantastic. I do know that in Europe, people are still able to buy the Hong Kong shares of China Mobile. So the truth of the matter is that the stock didn't cease to exist. It still exists. It's just in a different place now. Or it's instead of two places, it's in one place. So if you're worried about delisting in the U.S., I think the first thing to check is, do you have access to the Hong Kong exchange? That's the first thing to check. Like, could you just move your money over if you needed to? And the second thing to check is what happened to that batch of stocks that was delisted in early 2021. Check to see if you can buy those now in Hong Kong. So the symbol for China Mobile is 941 in Hong Kong. So I would check with your broker to see if you can buy that. And if you can, I think the risks are minimal. Then just on a trading note, one of the best moves you could have made with China Mobile is actually to sell the U.S. shares as soon as the delisting was announced, which was in early January 2021, and then on January 8th, buy on the Hong Kong exchange the exact day that it was delisted, where the forced selling pressed the U.S. market way down, and the Hong Kong market as well, or the Hong Kong shares, and buy on that day. So maybe something to keep in mind if some of these companies in China actually aren't able to comply with the audit rules, and they're going to get delisted, but they're still listed over there. So that might be a trade to look into in 2024. So the last point, just to close up here, I'll say for me, pricing the risk is the key to this. I mean, right now, well, up until this week, it looks like the market had been pricing a delisting at 60, 70, 80% chance that it's going to happen, right? Everyone was fleeing and just basically selling indiscriminately. Whereas I don't actually think the chance of the delisting is that high. I'm putting in maybe an estimate of 10 to 20%, but we don't get over the hurdles in 3 years. So that's somewhat low, but within that 10 to 20%, I think the most likely scenario is that I'm still able to buy in Hong Kong. So the only real risk I see here is, do they get delisted, and am I permanently shut out of the Hong Kong market as well, based on some political issues? And I would say that's more like a 5% chance, probably less. And so a 5% chance, that kind of range of problem or risk in my head, is quite minuscule in terms of the opportunity that I see. So I'm not just looking at the risk, I'm looking at the risk and the reward and the potential upside here. With Alibaba, on my last video, I talked about the price to free cash flow, which I think is going to land about 10.25, I think, for their 2022 full year numbers, which ends in March, at the end of March. And so for a 10 multiple with a 5% risk of a permanent capital loss, that's actually a trade that I'll do all day, because if you just look at, if I get 20 of those situations, 19 of them will work out, or I'll end up, they may not work out, but I'll still be able to buy, I'll be able to buy the stock cheap and then follow it through. Whereas 1 out of every 20 will end up in a bloodbath. And for me, my risk tolerance, I'm totally happy to take that risk. And some people don't want to don't want that risk at all. And I totally understand that. But for me, I'm I'm a sucker for a very cheap price for a great company, which I think is the situation here, and I'm definitely willing to take that risk. I don't know if I have anything else to say on this front, but just the bottom line for me is I'm actually not worried about this. It's right in my comfort zone in terms of risk reward, and I've shown that by, I believe the position's up to about 25% of my portfolio now after buying all these calls at $75. No, it's $80 calls, which I bought about 4 or 5 days ago before the big spike, which was lucky. I don't want to take credit for that, but that was just one of the luckier moments I've had in the market. But yeah, hopefully that's helpful in some way. And if you have any questions, please put them in the comments. And if you find this video helpful, please hit the like button. It gives me an idea of what content is resonating with people. And yeah, I'll do another video about the other risks that we've heard about over the last 18 months. Have a great day, guys. Thanks.